All right, guys, welcome back to RoxomTV. Hope you're having a great day and had a fantastic weekend. Yes, and I am back in my home office because today our producer is not feeling too well, so we decided to do it at home. So, anyways, I hope you have a fantastic weekend because today's show is packed and the theme is quite simple. The world is pumping and crypto is getting left behind. Right now, the market mood is literally anything but crypto. So ABC, short for anything but crypto. Gold is making new highs. Silver is flying. Stocks are holding rather strong, but Bitcoin is going nowhere. It feels like everyone is celebrating except the crypto market. And that disconnect is exactly what we're breaking down today. So here's what we're covering. First, of course, the US versus Canada story just escalated, and it's no longer only about tariffs and China trade. Now we're hearing serious noise around the Alberta separation, which turns this into a national stability issue that markets can't ignore. Then we'll talk about winter storm fern because this is becoming a real economic disruption, whether it's power outages, travel chaos, and a knock-on effect into energy prices and the stocks that tied to natural gas, pipelines, and LNG. After that, we're breaking down the risk, the rising risk of a US government shutdown ahead of 31st of January deadline, and why that can flip markets into risk off mode and pressure Bitcoin even more. We'll also cover the new Trump accounts program and how it could quietly push more money into US stocks through false index investing and employer matching. And finally, one of the wildest stories of today, like how the ultra rich are using Bitcoin as collateral to borrow money for luxury spending without selling any of that Bitcoin. So anyways, it's a packed week. It's a packed show. So let's dive into the first story of today. So let me share my screen. So the first story of the day, of course, US and Canada tensions is rising. And here's a quick update. Because now it's not only about EV tariffs and China trade, it's starting to look like a bigger political fight, with the US openly talking about Alberta separating from Canada. This is turning from a trade argument into a national stability story, and that's why markets are watching. So, just a quick recap if you guys have been following this tariff, because, let's be real, Donald Trump has been throwing around tariffs basically every single week whenever he has a chance. So, Canada made a deal with China. Basically, what it involved is that Canada would lower tariffs for a limited amount of Chinese EVs. China would then lower tariffs on Canadian canola and some seafood. Canada said is a controlled deal, so it's not a trade, like a free trade agreement. The US said it could create a backdoor for China into North American markets. And now Donald Trump is threatening with 100% tariffs on Canadian imports if Canada follows through with China. Now, here's the part that shocked people this week, because there is a provinces in Canada, so Alberta, right here. So this place is actually really oil rich, and it produces a huge share of Canada's total oil. Alberta has always has some separatist voice, people who feel the federal government controls too much when it comes to the energy rules, pipelines, environment restrictions. So the separatist movement exists, but it's usually not mainstream. So what is happening right now is that this week, US officials made public comments that sounded like they support Alberta becoming closer to the US, even hinting it could join the US in some way. Okay, now let's be clear. No official action has happened, but the message alone is very powerful because it feeds into the idea that the US might be trying to pressure Canada from inward, so from the inside, not just through tariffs. And if Canada, critics are calling this foreign interference and destabilization. Like, let's be honest about Alberta. It's of course all about oil. Alberta is one of the most important energy regions in North America. So, from a geopolitical view, if Alberta becomes more independent, that would mean a weaker tie to Ottawa. That could change how energy is negotiated and controlled. That's why Canadians are reacting so strongly to these comments. It's not just talk, it's about sovereignty and long-term control. And let's do a reality check, and because I want to keep everything realistic. Alberta, the talk of separatism, is still a minority view overall. Like, support changes over time, and it often depends on oil prices and frustration levels. There is a push to gather signatures for a referendum, but it's not guaranteed. So this is not Canada breaking up tomorrow. But the reason is a big story is because once a country starts arguing about separation, it creates uncertainty. And uncertainty is, of course, very bad for business, investment, and markets. And now, at the same time, Canada Prime Minister, Mark Carney, came out and clarified something very important. So he basically said Canada is not trying to sign any full free trade agreement with China. He's just trying to position this deal as like targeted control and still aligned with North American trade rules. So what the prime minister is saying is like, okay, this is not Canada choosing China over the US. It's more like we are fixing specific trade problems, especially for the local farmers. So even with those clarification, the US is still threatening with big tariffs, like no surprise there, right? And this is making the market very nervous because once you threaten 100% tariffs on a major trading partner, it's not a normal disagreement anymore. It affects cross-border supply chains, business confidence, investment decisions, and even jobs on both sides. So let's wrap this up. Like, this is no longer just Canada did a China deal. Now it's turning into a bigger story about pressure, leverage, and national unity. So key takeaway, if trade tension grows and political instability grows, market will price in risk fast. So this is one to watch closely because the headlines can move very quickly from here. All right, so second news we need to cover is, of course, the winter storm that's happening in the US. Like, the storm is turning into very serious national disruption. So winter storm, Fern, is not just snow. It's shutting down travel, knocking out power, and now it's starting to hit energy prices as well. This is becoming a real economic story, and it could impact everything from gas prices to utility stocks and even how people move around this week. So as of today, Winter Storm Fern is hitting huge part of the US. So there's actually a map of the areas that is affected in the US. So we're talking about snow, ice, and dangerous cold across multiple regions. Millions of people are dealing with heavy snow in northeast, thick ice in the south, and extreme cold in several areas. And sadly, there are reports of deaths linked to the storm, mostly from accidents and exposure. So here's the part that is hitting people the hardest, is the, of course, power outages. Close to 1 million customers have lost electricity, especially in southern areas where ice is snapping trees and power lines. And when power goes out in freezing weather, it's not just inconvenient, it can be very dangerous. So if you're watching from an affected area, please stay warm, charge your device, and keep an eye on local alerts. This storm has also crushed travel. We have seen over 11,000 flights got cancelled, with thousands more delayed. Airports are jammed, roads are icy, many schools are shutting down or going remote. So if you're traveling, honestly, this is not a week to hope for the best. Just expect more delays to come. And a lot of states have declared emergencies, and the government is coordinating support and clean up as the storm moves through. The point is, this isn't a one-day storm. The impacts can last several days, and especially when ice makes it very hard for crews to repair power lines fast. Now let's connect this to the market. So, like, I know a lot of folks might be affected by this, but at the end of the day, like, this is a finance channel, this is a Bitcoin channel. So let's also tie back to the economic side of things. So people are now connecting this to the markets, because this is where it gets interesting. Like, when you get cold like this, people use way more heating. The energy systems get stressed and supply get disrupted. And that's why energy prices are reacting fast. Natural gas prices have jumped because demand is rising fast. And we are also seeing some oil and gas production slow down because the cold weather makes it harder for crews and equipment to run normally. So the setup is simple. There is a uptick in demand. There's less supply, and of course, that would equivalent to higher prices. So if you're watching markets, here are the areas that traders tend to watch during storms like this. So first of all is, of course, natural gas suppliers, natural gas producers. When gas price spike because everyone needs heating, and these names often move very quickly. Like, the big one we could look at is EQT, this company. They are one of the largest natural gas producer in the US. The business is simple. They pull natural gas out of the ground and sell it. And when gas price rise, the market tends to pay attention. And if you want a more balanced energy name, so there's another one, EOG Resource. So that is the second company that is worth watching. They are not only natural gas, they are a major oil and gas producer. And investors watch them because they are seen as one of the higher quality operators in the US energy side of things. So for the past 5 days, especially, past 5 days, it was up 1.5%. And if we zoom out to 1 month, it's up 4.67%. So this is like one of the impacts of the storm, and especially just focus on the 1 month, then you could draw the ties quite closely. And these stocks don't only move because of long-term fundamentals, of course. In weather events like this can be a short-term price and supply story. So that's why traders are paying very close attention to sectors like this. And the second category traders are looking at and potentially could make profit from is midstream energy and pipelines. So these companies don't rely on guessing price direction as much. They make money by moving oil and gas through pipelines, almost like a toll road. So one name here we can look at is Kinder Morgan. So they are one of the most well-known pipeline companies in the US, especially in gas infrastructure. So that is quite similar to EOG in terms of the price movement, because if we look at the past month, we generated 8.75% in past month alone. So that's pretty good. And again, like, most of the price action came from the past 5 days because of the storm. So it's very sensitive to news like this and to natural disaster like the winter storm. And then another one we could look at is energy transfer. They are also a major pipeline and energy transport player. They can benefit when energy volume stays strong, but storms also create short-term risk if flow gets disrupted. So similar to Kinder Morgan and the first one we're giving also EOG, past month the performance is doing really good, so 10.71%. And again, most of that pump came from the past 5 days because of the winter storm, so that's why it went up so much. So this sector, like both energy transfer and Kinder Morgan, belongs to the pipeline sector, and pipeline stocks often move less than producers, but like they are still benefit, like they can still benefit when demand stay high. And then the again, like last sector people are watching very closely is of course LNG exporters, liquefied natural gas. So the big name here is Cheniere Energy. They are basically one of the main companies helping the US export natural gas to the world. So even when the US market is stressed by cold weather, there's also global demand. So from Europe, from Asia, and that long-term LNG trend has been pretty strong. So key takeaway, like LNG is not just a winter trade, it's a long-term energy trend, and storms can create short-term volatility. So hence the past month performance is up 9.5%. That's really good. Like of course, like if we zoom out a little bit, okay, 5 years, how about that? Like 5 years is up 227%. So that's really good. And because it's the LNG sector we are looking at. So I do have a paying close attention to this sector as well. And especially this company, as I mentioned, is helping the US export natural gas to the entire world. So that's why I'm eyeing this very closely. More like a long-term play, I would say, because like if we just look at the past year performance, it's not entirely good, like down 7%, year to date. Okay, year to date is all right. But like, yeah, it's more like a long-term play. But if we zoom out to maximum, it's actually, okay, 1,158%, something crazy, like since 1995. So yeah, I mean, I have this in my portfolio as a long-term play. Although what happened during the storm like this is like one of the factor why we have seen crazy return in the past few days. Okay, so this storm is creating a shock to the system. Like demand is spiking, of course, supply is strained, and the energy market is reacting. So if you are in affected states, so please stay safe and stay warm. And for the market side of things, keep a close eye on energy prices, outage updates, and any supply disruption headlines. All right, so we will take a short break for now. Coming back to you, we're also going to dive into the US government risk because we have a deadline coming up on 31st of January, so very soon. So we're going to talk about that and the impact on the Bitcoin market. So stay with us.
Security matters. Xapo Bank, the only way to bank your Bitcoin. Apply now at zapobank.com.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If If I were you, I'd thank me.
You know my name's Dave, right?
All right, guys, welcome back, and thanks for sticking around with us because the next story is a big one and it could hit market fast. The US is now days away from another government shutdown, and the odds just jumped hard overnight. If Washington freeze, markets usually turn risk off. That means more volatility for stocks, and it could be really bad news for Bitcoin and crypto in the short term. Like, not to mention, we are already in bear market, so it doesn't look like we're gonna turn around anytime soon. So let's get into the situation in simple terms. What's happening? So the US government is running on temporary funding right now, and that funding expires on 31st of January. So you could be like, oh, Jamie, I thought we saw the news just months ago. Yes, like there's another shutdown risk yet again. So if Congress doesn't pass a new deal in time, the US could enter a partial shutdown. What does that mean? Well, I'm glad you asked. Well, that means government work pauses, some serious services slow down, and a lot of people stop getting paid on time. Even if that's partial, the market still hates it because it creates uncertainty and it's, of course, no good for the economy as a whole. This is happening because one major fight in Congress, like being the funding for the Department of Homeland Security, so the DHS, and there's a bigger spending plan that includes a large budget for DHS, and now Democrats and Republicans are again like in a standoff over it. So Democrats, what they want is that they want changes and accountability, whereas Republicans, they want the funding passed as is. And right now, neither side wants to blink, and neither side they are talking basically. Now, what made this situation explode is a recent shooting involved federal agents. So a man named Alex Pretty, a ICU nurse, was killed during an encounter with federal immigration agents. Videos of that on the internet spread out fast, and it sparked protest and a massive political reaction. Democrats are basically saying we cannot approve funding without reforms. And Republicans, what they've been saying is that this couldn't block the entire budget. So now this isn't only a money issue. It's very much emotional and political and headline driven. And that's why the shutdown probability is rising very quick. And this also an interesting part. So if we hop onto poly market, because poly market is always spot on with things like this, right now, around 77%, but it pumped all the way to 80%. And this just happened like within a day. So on 24th of January, we're sitting at 9% chances that we might get another shutdown, but like overnight we jumped from 9% to 80%. Like that's really crazy. So basically people are predicting that we're gonna have some more economic distress. Like this massive jump when the odds were so low, like at 9%. So whether you trust poly market or not, the message is clear. Like people think this is close. Now, quick reality check. Shutdown doesn't mean the whole country would shut down. It only means, okay, the essential services will still operate, but like non-essential part of the government would slow down or will stop entirely. So that would include like things like in national parks or air traffic, etc. So the market impact comes from a few things like delayed payments, delayed approvals, and overall risk-off sentiment. Even if it's short, it does send a signal like the politics is getting messier, and it seems to be the trend in the coming months or this day and age. So markets don't like surprises. When shutdown risk rise, investors often move into save mode. That means like less risk taking, less liquidity, and more selling in volatile assets like digital assets. So even though shutdowns are political, the market treats them like a real financial risk event. Now, let's bring it back to what you guys really care about, Bitcoin and crypto, of course. So a shutdown won't turn off crypto. Like Bitcoin doesn't depend on the government to keep running. But here's the reality. Crypto trades like a risk asset most of the time. So when markets go risk off, Bitcoin can drop with everything else. And that's what we have seen in the past few months. Shutdown risk can pressure Bitcoin short term, even if Bitcoin's long-term story stays strong. So going forward, what we have to watch next is, of course, like the headlines from Congress, any sign of a deal or any sign of escalation. And the deadline is going to be 31st of January. So that's the pressure point. So if shutdown happens, do expect volatility, especially in Bitcoin and in crypto. All right, so this is just how the macro is doing that will affect crypto. But since anything but crypto is pumping, so that would include stock market, that will include gold and silver. Let's take a look at the traditional side markets, maybe TradFi a little bit. So one thing that caught my eyes, so this is very interesting. There's like the quiet market pumps happening in the US right now. Like I'm sure a lot of our viewers have heard of the Trump accounts, and it sounds like a kid's savings plan, but it could actually become a steady money engine flowing into the US stocks for years. So this program forces money into index funds, and big companies are now matching it, meaning more demand for US stocks, and even if fundamentals don't match. So let's break it down. Well, what do I mean by Trump accounts? So Trump accounts are a new federal investment account for kids. It's designed to help children build wealth early. This program is for children born from 2025 to 2028. And the goal is basically every kid starts life with money invested in the US stock market. So that's the part that shocked people. And the US government provides a one-time $1,000 deposit into the account for eligible kids. So it's like a starter pack for investing. It's automatic once the account is set up properly. Now, this is the key part. This money, of course, is not allowed to go into any volatile stuff. Of course, TradFi people will still think Bitcoin is very volatile. So no Bitcoin, no meme stocks, no, not even individual stocks or any risky stuff. Instead, it can only be invested into low-cost index funds. So things like the S&P 500, things like the US stock market index or broad ETFs. So it's a forced buy America strategy. This is where it gets really interesting for Wall Street, because if millions of kids are born every year, every child gets $1,000, that becomes billions of dollars flowing into the US index funds over time. And it doesn't care about earnings or valuation or whether the market is overpriced. It just like buys automatically. So it creates a steady new buyer in the stock market. And the latest update that we got is that some of the major companies are now offering employer matching, meaning if an employee has a child and opens this account, the company may add up another $1,000. So now you're not starting with $1,000 anymore. You're starting with $2,000, depending on where you work, of course. So it's basically like a 401k, but for your child. And it also helps companies attract workers because is sort of an employee benefit as well. So of course, the since this is only for the big index or maybe the S&P 500, so the top billionaires in the US would be very interested because like this is the money that will eventually go back to the stock. So that is the constant looping effect. Yeah, there's like a win-win situation for the billionaires. So let's be loud and clear here. Okay, let's be fair. This helps a lot of families because if they actually hold long term, but perhaps the question we should ask is whether this move is smart or just artificial money being printed even more in creative ways. So there's both sides of looking at this news, like the smart arguments. Supporters say this is great because like it gets people investing early, it teaches long-term thinking, and historically speaking, the US stock market does grow over time. So it's like a wealth building tool. However, like the skeptical side, what critics are saying is that this is basically pushing money into stocks no matter what. It can inflate the market, it can push prices up, even if earnings don't grow that fast. And if we are already in a pricey market, it could create more bubble risk. So some call it policy-driven market pumping. Personally, I think like presenting by Donald Trump, this is a way that like, billionaires just like gather around and think of creative ways to just keep pushing the price higher and eventually like giving kids $1,000 and especially approaching the companies, the billionaires that are already in the S&P 500, like they'll be very intrigued to learn because that money they know that it's going up only. And this is another creative way to push up that stock's price. So the S&P, of course, is already dominated by big index funds. Now this program adds another steady flow into those same index products. It's not like a huge amount overnight, but it's a constant tailwind, like I would say slow, steady push. And over time, this passive flows can support big companies the most because index funds buy the biggest stocks first. So to wrap this up, Trump accounts are being sold as kids saving program, but the real impact is even bigger. It's a government designed system that pushes money into the US stock index. And now big employers are matching it as well, which adds even more value. So key takeaway, this could support US stock long term, but it could also raise questions about valuation and whether markets are being propped up. All right, so let's take a short break for now. And coming back, we're gonna dive deeper and we're gonna dive in depth to talk about why everything else is pumping that include traditional markets, so like the S&P 500, like the silver, like silver and gold, but crypto is going nowhere. And especially if we compare the past year performance, Bitcoin is losing money compared to gold. So it's not a great feeling, but like, let's take a short break for now, and then we're gonna dive into the details.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
All right, welcome back, guys, and thanks for sticking around with us. We're now going to dive into and really talk about the most frustrating thing that is happening in the market right now. Stocks are pumping, gold is at record highs, silver is exploding, and crypto just feels stuck. Bitcoin can't even hold its major support at 100K, and altcoins, of course, it feels like it's dead. Right now, the market is in a mood of ABC, like short for anything but crypto. So let's look at the scoreboard for now, because okay, there is what we've got right now is the past year performance comparing gold, S&P 500 and BTC. So of course, BTC is sitting at the bottom, which is not great. So gold, on the other hand, it ripped 133% in the past year performance. S&P is still a positive return, so like a 35% return for the S&P, while Bitcoin is only a 21, so close to 22, so 22% return. And silver is even crazier because silver is ripping new all-time high. It's one of the best performing assets recently. Crypto, of course, other than Bitcoin, altcoins are bleeding really bleeding even more painfully, and this is why people are saying anything but crypto. Everything else is pumping. So let's get into the reason why this is happening, why crypto is underperforming so much. So it comes down to a few big reasons. So Bitcoin is like the early warning signal of global markets. It moves fast when liquidity changes. So when money is flowing and risk appetite is high, Bitcoin pumps hard. But when liquidity tightens, Bitcoin usually feels it earlier. So Bitcoin isn't trading like gold right now. It's trading more like a high risk tag asset. And especially a lot of people are confused because they say, okay, Jeremy, rate cuts are coming. We know that there's only room for whoever replaced Jerome Powell to cut rates. So why isn't crypto pumping? Simply because of rate cuts alone don't mean liquidity is flooding in. In the background, we still have tight financial conditions. We still need less easy money. We still have less easy money and people being more careful with risk. And crypto is extremely sensitive to that. Crypto doesn't like slow money. Crypto like fast money instead. And the second big reason why the world feel basically crypto is behind is the world is feeling so tense right now. There's so much tension around different countries around the world. When there's geopolitical stress, investors usually do one thing. They rotate into safe haven assets. So of course, gold has been around for centuries. We can't compare centuries compared to more than a decade old, so actually less than 2 decades old for Bitcoin. So there is it's not on par, it's not on the same level. Of course, we're heading to that. We're trying to be the digital gold, but for the time being, markets just don't seem to think like that. Well, actually, I have the wrong time frame. If I zoom out to one year past performance, gold is up 85%, while Bitcoin is actually down 13%. So people are really, really unhappy with the Bitcoin that they're holding, and especially altcoins that they're holding. And a lot of people are rotating from Bitcoin to gold, or maybe even silver, because the situation in Hong Kong, there are a bunch of people queuing outside a silver store and trying to purchase an entire silver bar. So that's what they call safe haven assets. That means gold, that means cash, defensive stocks, and maybe sometimes even energy. But they don't rush into altcoins or some precious internet money like Bitcoin. So while gold is celebrating, crypto is sitting in a corner like, okay, this is not my moment. It's not my party yet. And here's another point that most people miss. Stock markets are not only pumping because fundamentals are amazing. A lot of this is policy driven and capital flow driven. Money is going into national strategic sectors, defense or AI chips, basically anything with government support. But like crypto doesn't have the same type of government support, like official government money flowing in right now. Yes, we have ETFs, and yes, we have institutions like they're very much involved. But the price action shows the market is still in a wait and see phase. And what we know about crypto so far is that, okay, we have a pro-crypto government, we have Trump, but the effect of Trump is slowly coming down. So in other words, the political side for the tailwind is not enough to justify for Bitcoin to go higher. That's why everything else is ripping apart from Bitcoin and also altcoins. So let's talk about what feels different this cycle, because people like to say, okay, we know the equation, so Bitcoin pump fast and then profits will rotate into altcoins and then we're going to get alt season. But right now in 2026, there are simply too many tokens, too much supply, too many unlocks and too much dilution, and there is the same liquidity. The liquidity is really spread thin. So alts don't pump as easily anymore. This is why it feels like Bitcoin is stuck while altcoins are suffering so much. Okay, now here's the part you really need to know. Crypto being slow doesn't mean crypto is finished. It could mean we are in boring phase, and historically speaking, boring phase can be the setup before a big move, because when everyone gets exhausted, everyone gives up, and that's usually when the market starts moving again. However, I'm afraid to break it to you, I do not think we have seen the bottom for altcoins yet. Okay, if we take a look at poly market, then let's see what the majority of people think about where Bitcoin is going in 2026. So if we compare gold, Bitcoin, and S&P 500, so 44% of people think, okay, gold will outperform. And then 38% for Bitcoin, only 17% for S&P 500. And of course, this changes over time. We're going to keep a close eyes to see where this goes. But right now, of course, gold is winning, Bitcoin is losing. If we look at past year performance, Bitcoin is down 13.91%. But in the past, like when the gap between Bitcoin and gold becomes so extreme, Bitcoin sometimes come back hard later, but on a later stage. So that's what I have to emphasize on, okay? So even though the mood today is ABC, anything but crypto, the contrarian view is crypto is being left behind so badly, it might be setting up a catch-up move on a later stage. So I do not think it's going to be coming weeks, or perhaps it's going to be coming months. I'm eyeing Q3 or Q4 this year, 2026. So here's the honest playbook. What I would do is that I don't want to chase this pump for gold. Past year performance is up 85%. So this is really crazy. And silver is even crazier. Silver is basically on a vertical ride. So chasing it right now for my own, okay, it's not financial advice, but I'm probably not going to do that for my own portfolio because I feel like it's too risky. And another playbook that people don't want to hear, don't over trade crypto just because you feel like maybe altcoins are going up, or maybe just you're bored, because most people would lose money in chop like this. And do watch the liquidity and market mood, because again, when liquidity improves, crypto can move very fast. So right now there's still so much uncertainty and volatility in the market. I am not buying altcoins. Let me be loud and clear. So to wrap this up, crypto feels like winter because the market is rewarding safe assets and policy-driven, policy-backed assets right now. Bitcoin is acting like a liquidity indicator, and liquidity is not fully back yet. When the market rotates back to risk, Bitcoin usually moves fast. So speaking of Bitcoin, right now, let's move to do a little bit of TA. So starting with the shorter time frame, we're going to look at the daily candles, and then we'll take it from there, and we're going to hop onto the weekly in a bit. So the daily candle, one thing that I find it quite horrifying. So that means, well, not horrifying, because like we know this is a bear market already, but like I thought the pump is going to be a little bit bigger, like the relief rally going to be a little bit bigger, maybe perhaps close to 100K, but like looks like the strength really isn't there. So we knew it was a pump, though the pump, the rally, it was quite pathetic, but that's fine. So we drew this like rising support weeks ago. So we've been building this up since 21st of November. Basically, whenever Bitcoin comes close to this rising support, we happen to bounce back. But one thing that happened over the weekend is that on 25th of January, we broke below this rising support. And of course, this is a very, very bearish setup. So that means we're going to head to lower places, like how low we could go. One level I'm eyeing very closely is actually 77K. So this is a level I'm watching because like we tend to find, okay, back in November 2024, we found resistance around 77K. And here we had like, we used 77K as the support. So like the prior resistance is going to be our prior support. So like basically what I'm doing from my personal investing, I will always separate into trading bag and investing bag. Like trading is for me to have a little bit of fun or flip quick money. But like investing or buying altcoins is to make generational wealth. So 77K is a level that I put in quite some buy orders around this level, though I do not think this is going to be the cycle bottom. I need to be loud and clear, but this is going to be an area that we could find some support for quite some time. And then if we really drop to 77K, then we'll take it from there. But like right now, I have my purchase order around 77K. This is only for daily, since we broke out of this rising support trend already. So this is really not good. And let's hop on to the weekly as well, because like we have talked about, we're gonna see this this correction. Like, okay, we had the relief rally. So if we look at the pump from 86K to something like, okay, we take the top of 97K, like that was a relief rally of 13%. So basically what it means, okay, this is the first phase of bear market, and then here we have the second phase, and right now we are officially entering the third stage of bear market. That means more pain ahead. So people like to ask, okay, Jamie, so how low we're going to go? First thing we need to pull is the Ichimoku cloud. So this is a leading indicator. This is one of the best indicator out there because, okay, if we zoom closer, we officially went below the leading span B. So leading span B last week, it was at 86.2K. And right now, we officially went under the leading span B. So of course, more bearishness. Like initially, we thought the pump gonna last till maybe first week of February. So the time that we eyeing is 9th of February, but looks like we are earlier compared to the previous cycle. But regardless, we're right on the trend. if like, because what I've witnessed is that all of the influencers are still calling, okay, it's a super cycle. We're going to see a new all-time high in 2026. Like judging from a technical standpoint, I would say the probability is quite low. And yeah, the pump is so much smaller than I originally expected, because like even within the Ichimoku cloud, there is a resistance of around like 104K, and we didn't even get above 100K. So what it showcases is that, okay, this cycle in a way is different, but like is the there's diminishing return. Also the effect of going down is diminishing as well. So like last cycle, we were inside this Ichimoku cloud for like 90 something days, so 3 months, a little over 3 months. And this cycle looks like it's shorter. So we were officially inside this cloud for only like 70 days. So we went below. Let's see if we are let's see if we're going to go back into this Ichimoku cloud, and then we'll take it from there. But like so far, I'm quite bearish. I think we are officially entering the third stage of the bear market, and then how low we could go. Like the cycle bottom that I'm eyeing, we right now need to pull off the 200-week moving average. So a general rule of thumb is that, okay, if we have 2 weekly candles, so 2 weekly candles below the 50-week moving average, so being the blue line right here, that is the definition of bear market. So I don't know what these influencers are on about and saying we're going to head higher. Okay, from a technical standpoint, from a trading perspective, I'm having such a difficult time convincing myself and basically fight with those YouTubers out there, those influencers out there. But like, if you have a long-term mentality, if you want to DCA, then I think that's a good idea. Like, go for it. But like trading side, like if you're looking for a quick flip, it really doesn't make sense. Like it doesn't convince myself logically. So the general rule of thumb is that we're gonna go to 200-week moving average. So 200-week, of course, is gonna slowly catch up. And then if we have similar pattern play out compared to previous cycle, then we're gonna see a cycle bottom. We're gonna see the cycle bottom on 5th of October 2026. So by that time, we might be around like 72K, like just like drawing a very rough estimation. Like some people would say we could go to as low as 30K, 30. I find that quite ridiculous as well. But not saying it's completely impossible, because Bitcoin like to surprise all of us. So if we are going down to 30K, that would be another 65% reduction. So we'll take it one at a time. So far, like judging from the 200-week, that is just like general idea, the cycle bottom where we would go. Because like last cycle, we even went below the 200-week moving average. So we found the bottom at 15.5K, somewhere around that. So that is a cycle bottom. But like it doesn't have to be like always the case, because sometimes we're trading above the 200-week moving average. So again, take it one at a time. But like the cycle bottom, I'm not eyeing as something as crazy as 30K, but around like 60 to 70K, I think is highly probable, and the cycle bottom forming could be very likely going to be around October or somewhere earlier, because people like to think the cycle is different. So let's see how it plays out. All right, so speaking of Bitcoin and also taking profit, like right now I'm not buying anything. I'm not buying any altcoins. I'm actually shorting some of them. But like another story that I really want to move on is that, okay, despite some people are struggling in a market like this, I want to remind all of us that there's always a bull market somewhere. Maybe it's in gold, or maybe it's just like following technical analysis and selling at the top at 126K, because like that is a time frame that I have been talking and telling my viewers for months. I mentioned the 6th of October 2025, it could be a cycle top, and that's exactly what happened. Yet people don't like to, seem to think that, okay, looking at the chart is like reading tea leaves. And for that kind of people, I think you do you, I do mine, because my trading and my math is working very much in my favor. Anyways, if you manage to take profit according to the TA that was giving out months ago, like you shouldn't be like struggling right now. And you know who else it has been like they have been doing well is of course the ultra wealthy. Okay, and there are a few tricks that they're doing right now to make even more money without selling their Bitcoin. So I do want to share a little bit more how the highest level, the ultra rich, are doing, and maybe we could learn a thing or two from them. So the richest people are playing a totally different game, because while retail is asking, should I sell Bitcoin to take profit? The ultra wealthy are doing the opposite. They're using Bitcoin like a private bank account, borrowing against it to pay for things like yacht upgrades, luxury trips, and big lifestyle spending without selling a single Bitcoin. So the rich don't cash out Bitcoin, they use it as collateral to get cheap liquidity. So here's the concept in simplest way ever. If you're rich and your market is in assets, you don't want to sell them, because when you sell, that will trigger your taxes. You'll lose upside and you might regret it later, especially selling your Bitcoin. So instead, the wealthy people would often do this in traditional finance. So what they do is that they will borrow against stocks and portfolios. It's called a collateral backed loan, like kind of like use your wealth as a security and get cash today. Now, crypto rich investors are doing the same thing, but with Bitcoin. But here's the issue, like a normal bank, they don't want to accept Bitcoin as collateral, because like they have a traditional mindset. They think Bitcoin's too volatile, too risky, it's not regulated enough. So even if someone has $15 million in crypto, their bank may still treat them like, okay, sorry, we can't lend you any money using that. So that's how DeFi comes into play. And this is what ultra wealthy investors are doing. They take their assets like Bitcoin, Ethereum, and even stablecoins USDC. They will use platforms like Aave, Morpho, Uniswap to create a credit line. So instead of selling Bitcoin for cash, they deposit Bitcoin as collateral. They will borrow stablecoins and spend that stablecoins in the real world. And that Bitcoin stays invested. So the key takeaway is that it's selling nothing, stay exposed, and still get the money to purchase the yacht. Now, the article talks about a firm called Comnet, led by Jerome de Taichi. The job is basically to help family offices and wealthy clients to use DeFi very safely, because even someone is rich, they might not understand how wallets work, might not understand how borrowing works or what the risk is. So Cometh is acting like a DeFi advisor for rich clients. And there are a few reasons why DeFi loans is getting so popular, and especially to the ultra rich. So first of all, it's the speed. Like DeFi loan can happen really fast. It could happen in seconds. And traditional private bank loan, it could take days. And second of all, there's no paperwork. So TradFi, they will ask for credit checks, tax returns, a lot of approval steps. Well, DeFi is coded based. It doesn't care who you are. It only cares about collateral. And the third layer is the privacy. So some people like that. DeFi is more private than bank style. Now, like I want to be very careful here. Like privacy doesn't mean risk-free. It just means the process is different. And this is where like many people get wrecked. Like DeFi loans are not forgiving. So there's still a catch for if you want to, okay, you find that, okay, Jamie, this sounds very interesting. Maybe I want to put my Bitcoin as collateral and use that stable coins to purchase something or maybe fund my daily lifestyle. But just bear in mind, there's still risk involved. Like DeFi loans can still be very risky. Like if Bitcoin drops too fast, the system can force sell your collateral. So that's called liquidation. So like going back to the TA I was giving out, since we know we are about to enter the third stage of bear market, and perhaps we're going to find a bottom in around October 2026, or maybe like a Q4 2026. So point being, there's more probability of us going down. So putting your Bitcoin as collateral and borrow against it is kind of risky. So and for DeFi loan like this, like if you do that for Bitcoin, like there's no way walking into a bank and maybe talk to your banker asking, okay, please add more money. Like everything is automatic when it comes to DeFi lending, like DeFi loan. Like, of course, like DeFi borrowings is powerful, but like it punishes mistakes instantly. Like DeFi credit is fast, but it can liquidate you even faster. So do know your risk. In TradFi, rich people use something called Lombard loans. That means like borrow against your assets like stocks and bonds, so you can spend money without selling investments. Now, crypto people are doing it the same with Bitcoin and Ethereum. So if you ever wondered, how do crypto whales live rich without selling and purchase themselves a euro? Like, there you go, that's your answer. And as for the next step, TradFi assets using DeFi strategies, that's where it gets interesting, more about the long-term future part. So Comet is also looking at doing this for normal stocks as well, like using systems where stocks can be plugged into DeFi style borrowing. So imagine a world where your Tesla shares or your S&P 500 portfolio can be used in a DeFi-like structure. That's basically what some people call like TradFi turning into DeFi, or like DeFi becoming more like TradFi. So I do expect the line between traditional finance services and crypto services going to be more blurry than ever, because that is the case that we're seeing. Like Coinbase is trying to offer RWA, trying to offer stocks or even precious metals, so as Bitcoin, so as Binance, and as for Robinhood, they're getting to crypto. So the line is going to be more blurry, and that seems to be the trend. So just to wrap this up, like the ultra rich are using Bitcoin like prime collateral. They are borrowing against it to fund lifestyle spending while keeping the crypto exposure. So they are not selling fast, they borrow fast. And DeFi is becoming the new private bank for people whose wealth is crypto native. So yeah, this is just one very interesting stuff that I learned from reading and also talking to high level thinking, high level investors, so to kind of improve my thinking. All right, so that was all the news that I want to cover today. So last call to action before we wrap the show. Make sure to give us a follow on Twitter. So my own Twitter is gemcrypto_io. Make sure to follow RoxomTV as well, because we have valuable content updating very regularly. We not only talk about Bitcoin, but we talk about like global news, or AI news, geopolitics, or gold passing $5,000 for the first time in the history. So point being, there's so much valuable content you don't want to miss out. So make sure to give us a follow and turn on the notification bell. Anyways, my show is from Monday to Friday, starting at 3 a.m. Eastern Time. If you don't manage to catch my show live, don't worry. The replay is also available on both YouTube channels, and my own YouTube channel, Gemini Crypto YouTube channel, and RoxomTV YouTube channel. Thank you so much, guys, for watching, and I'll see you guys in tomorrow's show.